Hello guys, welcome back to Riven Rock FinTech channel. So today we're going to talk about the Federal Reserve decisions on recent inflation. And as we all know that I used to be warning that we're now suffering hyperinflation. And the only way to get out of this effect is through aggressive actions that Fed would have to go through a series of very hard decisions. That means the U.S. economy would have to go through a technical depression, a recession, to be able to ease the impact from the hyperinflation. Because from history point of view, as we all know that Federal Reserve chairman, the ex-chairman Paul Volcker used to hike interest rates to a very aggressive extent to be able to lower the inflation down. So right now, Powell is actually facing the very similar situation. So therefore, recently on 17th of May, Powell says the Fed would not hesitate to keep raising rates until inflation comes down. Right now, the market has come back from a bit, but this is a very hawkish kind of statement. By that mean is, there's a different terms for Fed to releasing a signal. It's very different. So for traders, we look at what the chairman of Federal Reserve would say, and we will trade accordingly. Given the fact that chairman would have probably very different statements. If the chairman has a very hawkish statement, we will trade a bit. I would say risk. I would say risk off. That means we are going to short equity. We're going to short all these risk assets, but we're going to buy some more of a hedge and more of defensive assets. But if the chairman of Federal Reserve actually says something very dovish, that means we're going to trade. We're going to add more risk assets into our portfolio. We're going to trade more stocks. We're going to trade more aggressively. So by that mean, it is very important to understand what the Fed is trying to release, what that signal is trying to release, so we can trade accordingly. Given the fact that Fed is releasing very different signals. For this message, Powell says the Fed would not hesitate to keep raising rates. This is a very hawkish statements. As I have been saying, that Federal Reserve would need to do this eventually. Despite of President Biden's will to stimulate the economy, right now the bigger problem for the United States is the inflation, right? And also potentially there is a supply chain crackdown right now. So that supply chain issue actually creates more inflation. So it's a very difficult situation for the Fed, and the Federal Reserve would have to conduct very strong actions, including raising rates more aggressively, and also cut off its MBS repo. The Federal Reserve is going to cut down, even stop buying those mortgage-backed securities to expand its balance sheet. On the other hand, right now, Federal Reserve is trying to reduce its balance sheet. We all know about QE and QT. Right now, the Federal Reserve is conducting a series of QT at the moment. So Federal Reserve Chair Jeremy Powell emphasized his resolve to get inflation down. So he says on this interview that he's going to raise more interest rates. currently, like recently, we've been raising around 75 basis points, and this month we've been raising 50 basis points. And now I wouldn't say that kind of raise movement is very aggressive, but right now, Chairman Powell might need to consider to raise the rates I would say bit more than the market would anticipate, because that is a strong dose for the economy. You need a swift and strong action, something that's far beyond the market recognition. And then certainly the stock market would plummet, and we will have a recession. But in short run, right, we're gonna have those pains in short run. But the good side is that we are going to have a weaker inflation, and we're going to have where a weaker inflation would actually stimulate more demand sides, with more, I would say, desire to consume from the demand side. Right now, the problem is, imagine you're a normal consumer, and every day you're spending a lot of money purchasing those energy, we're saying gas, to light up, to be able to cook, to be able to have a hot bath, and you're paying extra dollar for petrol to fuel your car, and you're paying more fees on energy than you should have, and also in the same time you're paying more money on, like, would say, daily stuff, where we're talking about you're spending more money on food. You're actually paying more for everything. So what's going to happen is your salary is not going to raise. You're not going to raise for your salary, and you have a very limited budget, increasingly limited budget. And the only thing you can do is to cut down your daily expenses. That means you're going to cut down all your consuming activity, which means the companies are not going to get as much revenue as they should have. So reduction from a revenue, reduction out of profits, actually kills the demand side. That's a problem, because right now consumers are paying a lot more than they should have, and therefore they're gonna cut down their consumption. They're going to cut down their expense. So therefore, you're not going to get as much of economic growth as you want. That's why I'm saying, if the Federal Reserve Chairman doesn't have the will, doesn't have what it takes to raise the rates quickly to around 3% or maybe 3.25% to that level, and which is far beyond, and which is exceeding the market recognition, and to kill that inflation, I'm afraid it's going to be a very difficult time for America, even though Fed is raising rates accordingly. But I do understand why Federal Reserve would want to postpone, because it all has to do with politics, right? As a president, you don't want to be blamed of causing that recession. You don't want to be that kind of guy. People will yell at you and say, if it wasn't because of you and you don't have this recession. But this is a very hard